My name is Farhan. This video explains how to solve the 10 multiple choice questions from 2022 Paper 1 exam. There is a significant chance that you may get similar questions in the upcoming exam in 2024. So make sure to follow through this content and understand every question properly. With that being said, let's get started. The first question requires you to identify which of the two statements is correct. Statement 1 says that an accountant is the only person who can complete the double entry bookkeeping. This is not true because the bookkeeper is the person who is responsible for completing all the double entry bookkeeping, and the accountant uses all the double entry bookkeeping that the bookkeeper has prepared to prepare the financial statements of the business. Statement number 2 says if an accountant completes the financial statements for a business, they will be error-free. Again, this is not necessarily the truth because it depends on how the transactions were recorded initially by the bookkeeper. So the bookkeeper's job is to record the transactions in the journal, then use the journal to transfer the transactions in the ledger account, and then use the ledger account as a basis to prepare the trial balance. Only then the accountant will be using the trial balance to prepare the financial statements. So if the trial balance was done incorrectly, given that the bookkeeper didn't record the transactions properly, then the financial statements which the accountant will be preparing will be full of errors. And therefore, on that basis, statement 2 is also not correct. So the correct option to select for question number 1 is option number D, which is that neither statement is true. What about the second question? Which definition best describes the accruals concept? Now, the accrual basis simply states that revenue is recognized when earned, not necessarily when cash is received. And expenses are recognized when incurred, not necessarily when cash is paid. So this means that you may have expenses that you will incur for the current financial year, but you are not paying for them using cash. You may pay for them next year. Even though that is the case, this is still an expense valid for the current financial year. What about revenue? You can choose to sell on cash or on credit. But regardless of whether you choose to sell on cash or on credit, it doesn't necessarily make a difference because the revenue is still earned and is sold in the current period. Therefore, the correct option to select for question number 2 is option A, which says that income and expenditure are matched to the period they belong to. Question number 3, which is the correct formula for the liquid capital ratio? So you'll find the formula given on page 33 of the syllabus, which is number D. So current assets minus closing inventory divided by current liabilities. Now, why is closing inventory being removed from the total of the current assets? This is because we are calculating the liquid capital ratio, and inventories may not generally be easily convertible to cash, or in other words, they can maybe not be made liquid easily because these inventories, which are part of the closing inventory, will be sold in the next financial year. So at the moment, if the business needs money straight away, they are not liquid, or they could not be sold easily for cash. So therefore, the correct answer to select for question number 3 is option D. You can memorize this formula and it's going to work out for you. Question number 4, which of the following correctly lists items to be shown in a partnership appropriation account? So here I have shown the format that normally goes into preparing the partnership appropriation account. So we start with the profit that the partnership or the business has made. Then we add any interest and drawings that the business will be giving out to that the business will be taking from its partners, because interest and drawings reduce the equity of the partnership. And therefore, this is bad for the partnership, and that's why the partnership charges an interest on these drawings, and that is the very reason behind why we are also adding it, because this is something that the partners will owe to the business. Then we subtract the interest on capital, which is what the business gives out to its partners because of the investment that they have made, and that is why we're subtracting it. And then we subtract the salaries that we give to our partners for running the business efficiently. And whatever is left behind is what we call the residual or remaining profits of the business. Now, the residual or remaining profits of the business is what gets eventually distributed among all the owners, generally in the ratio of the investment of capital that they have made within the business. So this is the entire outline of the partnership appropriation account. So on that basis, you can see that option C is the correct one because it contains interest and drawings, which is a part of the appropriation account. It also has the salaries, which is also included in the appropriation account, and the share of residual profits, which is what we eventually distribute among the partners based on the investment of capital that they have made within the business. So the correct option to select for question 4 is therefore option number C. Let's move to question number 5. A business had the following expenditure. What is the total capital expenditure? All right, so capital expenditure relates to purchasing a non-current asset and getting it ready for its intended use. It could also refer to modification of a non-current asset or adding value to an existing non-current asset. So the 4 things that are mentioned within the table, starting with the annual maintenance contract, this is what we call a maintenance expense and falls under the definition of revenue expenditure. Revenue expenditure simply refers to the day-to-day operating costs for the business. The reason why we classify maintenance contract as a revenue expenditure is because you will be using the asset in the next financial year as well. And in the next financial year, you will also have to maintain the machine as well. So that is why annual maintenance contract is not part of your capital expenditure, but rather classified as a revenue expenditure. The actual cost of the machinery of £14,000 is definitely a capital expenditure because this is the money that you have paid to purchase the machine. The delivery cost of £400 and the installation cost of £2,500 are also classified as a capital expenditure. This is because the initial cost of a non-current asset are the total costs that we need to incur to get the asset to its intended use. When you want to install the machine to begin with, you do not really have any maintenance. Maintenance comes along the way after the machine has started being used, after the machine is started to be used within the business. So capital expenditure, when it comes to finding the total cost for a non-current asset, will include all costs required to get the asset to its intended use, which in this case is the actual cost of the machinery plus the delivery cost plus the installation costs, because the last 2 costs are very important to bring the asset to its business place and get it started for its intended use. So the total of the capital expenditure is 14,000 plus 400 plus 2,500, and that gives us £16,900. And on that basis, the correct option to select for question number 5 is option number C. Let's move to question 6. A purchase ledger control account showed the following for April 2022. What was the balance on the purchase ledger control account on 1 April 2022? In other words, find the opening balance. Now, the purpose of preparing a purchase ledger control account is so that it can track the amount that is owed to credit suppliers of the business. In other words, it calculates the liability or the financial obligation that a business has towards its credit suppliers or trade payables. So here is an outline of how the purchase ledger control account would look like. So the opening balance, which is also the balance brought down, is on the credit side, £1,879. Now, if you have been following through my previous videos, you would know that I have explained that liabilities should always have an opening balance on the credit side and should therefore always have a closing balance on the debit side. Since the purchase ledger control account tracks the amount that we owe to our credit suppliers, it definitely fits the definition of a liability account, and therefore the opening balance must be on the credit side. So the opening balance, which I've written OB for short, you can also call it balance BD, is £1,879. So this number was derived by ourselves. So I'm going to highlight this number for the time being so we can show you how we got this number later. The closing balance is £1,600, which is also known as the balance carried down. Now the closing balance is given in the first line of the table. Balance owed to suppliers on 30 April 2022 is £1,600. So that is what the closing balance is, 1,600. Then we had credit purchases of £14,200 for the year. Credit purchases is going to increase the liability that the business has towards its credit suppliers. So since we're preparing the purchase ledger control account, anything on the debit side of this account should reflect a reduction in the amount that we owe to our suppliers, and anything on the credit side should reflect an increase in the amount that we owe to our suppliers. Because we have made purchases on credit worth £14,200, and because it reflects an increase in the amount that we owe our suppliers, we are including it on the credit side as purchases of £14,200. Okay, then we have discount received of £250. So discount received is generally discount receipt happens when we make a prompt payment to our credit suppliers, and because of the prompt payment, they're allowing us some form of discount. So if you think about it logically, discount received should definitely decrease the amount that the business owes to its credit suppliers, and therefore needs to be included on the debit side. So you can see on the debit side, I've written discount received, which is DR for short, of £250. What about the payment to credit suppliers of £13,915? So payment to credit suppliers definitely reflects a reduction in the amount that the business owes to its suppliers, right? So this should be included on the debit side as well, which is what we have done here. So on the debit side, we have shown that payment was made using funds in the bank of £13,915. The last one is return outwards of £314. So what is the meaning of return outwards? So from the perspective of the business, there has been a return outward, which means that the business has returned some of the inventory that it has purchased from its credit supplier. So if you are returning some of the inventory that you have purchased in the past, that should definitely reflect a reduction in the obligation you have towards your suppliers, and therefore must be included on the debit side. So this is what we have done. Return outwards, which is RO for short, of £314. Okay. So our main concern in this question is to calculate the opening balance, which is what you can see is highlighted in yellow. So we calculate the total of everything on the debit side, which gives us £16,079, which must be the total on the credit side, so that the fundamentals of accounting are applied. Once you take away the credit purchases of £14,200, you're left with £1,879, which is the opening balance on 1 April 2022. Or in other words, this is also known as the balance brought down on 1 April 2022 of £1,879, or the amount that we owe at the beginning of the period on 1 April 2022 to our credit suppliers is £1,879. And on that basis, the correct option to select would be option number C. All right, so let's move to question number 7. The following information is available with regards to the sale of a vehicle. And the question is asking, what is the income statement entry in the disposal account for this transaction? So you see I have circled in because this plays a significant role in what your answer should be. So I've got some format for you. So let me get that out. Okay, so this is the format for a disposal account, as you can see. So this is the exact format that I've used here in this case to answer this question. So in the table given in the question, we have been provided with the original cost of £22,000. We have also been given the total depreciation of £9,625 and the amount, which is the disposal proceeds of £12,900. This means this is what we got by selling our vehicle. All right. So using the format, this format is something that you need to memorize. And there's a significant chance that you may get a question like this, not maybe necessarily in the multiple choice, but it can come out like for a 10-mark or 12-mark question in your main exam coming up. Okay, so within the asset disposal account, on the debit side, you will see that we have included the original cost of the asset, which is what we have done here. So vehicle at cost £22,000. And then you will see on the credit side of the disposal account, we have shown the provision for depreciation, which is also what we have done here, based on the information we've got from the table. And on the credit side, it also shows the amount that we are selling our asset for, which is again shown in our workings here. And that amount is £12,900 for the disposal proceeds given here. All right. So what we did was to calculate whether or not we made a profit on disposal or loss on disposal. If you check the format of the disposal account, you will see that if you have a profit, then it will be calculated in the debit side of the disposal account. And if you have made a loss, it would be calculated on the credit side of the disposal account. All right. So the heavier side to begin with was the credit side when we wanted to close our disposal account, which was $22,525. And that must be the balance on the debit side. So if the cost of the vehicle is $22,000, then the amount left behind is $525, and that should be the profit on disposal based on the format that we have here. So we have made a profit on disposal of $525 for this vehicle that we have sold. Excuse me. Now, the question is asking, what is the income statement entry in the disposal account? So in the disposal account, you can see that 525 is on the debit side. All right. And therefore, on that basis, the correct option to select would be option number B, which is £525 debit. Okay. So let's move to question number 8. Alex, Maxine, and Sergio were in a partnership with profits shared on a 6-to-3-to-1 basis, respectively. Alex decided to leave the partnership, fully withdrawing his investment. The following balances were available. So in the table given here, you have the capital account balance for Alex, which is £32,000 credit, and you have the current account balance for Alex, which is £3,200 debit. All right. So a debit current account balance means that Alex owes money to the partnership. So I have discussed this in a video that I have uploaded a couple of days ago for a partnership problem. So make sure to watch that video so you can get a thorough understanding of what the current account balances really mean. So if we have a debit current account balance, that means that the partners owe money to the business, which in this case is Alex owes money to partnership. If we had a credit balance for the current account, that would mean that the partnership or the business owes money to the partner. All right. So be sure to identify this difference in your exam questions. The last one says increase in value of non-current assets of £15,000. Now, this increase in value of non-current assets is for the business as a whole, not for Alex. So the question is asking, which payment would Alex receive from the partnership? All right. So first of all, what we are doing is calculating how much of the increase in value of the non-current assets should go to Alex. All right. So here I've done some workings. So Alex's share. So what is Alex's proportion of the profit distribution? You can see it's 6 to 3 to 1. So Alex gets 6, if that makes sense. So Alex's share is 6 out of the total of 6 plus 3 plus 1, which combines the all three partners, which gives us 6 over 10. In other words, Alex gets 60% of the increase in value of the non-current assets of 15,000. So we do 6 over 10 multiplied by 15,000, and Alex gets a share of 9,000 pounds from the increase in the value of the non-current assets. All right. Now the question is asking, how much would Alex receive from the partnership when he's trying to leave? All right. So we have just figured out that Alex gets 9,000 pounds because Alex used to own 60%. So that's what he got, 9,000, which is 60% of 15,000. And then Alex has capital invested in the business of 32,000 pounds. This is given here clearly. But then we subtracted 3,200 pounds. Why? Because the current account has a debit balance. And we know that when the current account has a debit balance, this means that Alex owes money to the business. And that is the main reason behind why we are subtracting it. Because if Alex is trying to leave the business, he must pay the business before he can leave. So that is the main reason behind why we are subtracting it. And we get a final answer of 37,800 pounds, which is therefore option C as the correct answer. Okay. So let's move to question number 9. Sue believes an employee has stolen cash from her business. She provides the following information. What is the amount of cash stolen? All right. So we're given the opening balance for cash at 1 March 2022, 635 pounds. We are given the closing balance for cash at 31 March 2022 of 540 pounds. During the year, we had cash takings. So cash takings here could confuse some people, but cash takings here simply refers to cash sales or cash inflow of 18,000 pounds. Cash banked of 70,850 pounds simply means that I had some cash lying around which I deposited into the bank account. If that makes sense. So the question is asking, what is the amount of the cash stolen? So this is very intuitive, and you just exercise some simple logic and you can get the answer correct. So to begin with, we start with the opening balance of 635 pounds at 1 March 2022. We know that during the year we have got some additional cash, which is the cash takings. So cash takings. So from the perspective of the business, cash takings would refer to cash sales or cash inflow, cash coming in. So that's why we are adding 18,000 pounds. Then we are subtracting 17,850 pounds, which refers to cash that has been deposited in the bank account, as we have identified a while ago, and subtract X. So the X here is the amount that is the stolen amount that I believe. So why is minus X? Because it's stolen. So obviously it has to be an outflow. So that is why minus X. And this should all give you 540 as the closing balance for cash that is given here. So then what we have done, you can select each of the 4 options that are given here and insert in X and see which of these 4 options gives you a final answer of 540 pounds. You will see that the correct one is 245 pounds, which is the amount of cash that is stolen. And therefore, on that basis, the correct answer is option C. Okay, so the last one. Question number 10. Which error would be the most likely to be prevented by the use of accounting software? All right, so let's try to understand something here. So the error of commission. So could you give me an example of an error of commission? So think about one. So error of commission could be when you're treating, let's say, an expense in the wrong account. Let me give you an idea. So for example, rent expense treated as electricity expense. So this is what we call an error of commission. Both of these items are expenses, but what you have done is recorded in the incorrect expense account. So this is what we call an error of commission. Partial omission is something like, every transaction has a debit and a credit, obviously. So partial omission would be you recording the debit and not recording the credit. So that is what we call a partial omission. Error of principle is when you classify incorrectly. In other words, for example, you classify an expense as an asset, so which is wrong. So this is why we call this an error of principle. Reversal is you recording debit as a credit and credit as a debit. For example, let's make an easy example here. So cash sales of $500. Okay, so cash sales of $500. We are supposed to debit cash 500 and credit sales. That's the correct way to do it. But we ended up debiting the sales and crediting the cash, which is a reversal. So this is what we call an error of reversal. Now, option number A, C, and D is something that we cannot detect. These are errors that do not affect the trial balance. This is a key concept that is taught in your course. But partial omission can easily be detected. This is because, like I said, you include the debit, but you forget to include the credit. So which means that there is an imbalance. And this is something that is more likely to be easily detected by use of an accounting software. So on that basis, the correct option to select for question 10 is option B.